Hey, everybody, and welcome to this week's Monday Market Update, looking at the Orlando housing market. I'm your host, Tim Weigel with Watson Realty, and you're going to love to see these numbers. And like we do every first Monday of the month, we are reviewing the month over month. So we're looking at April 2022 compared to April 2021 to see where we've been and where we're going. And these numbers you're going to like to see. So stay tuned for a wild ride. Now, because Monday happened so early in the month, numbers could change a little bit, but you're going to get an idea of how our market is. And let me just say, some parts are not that great. Other parts are just amazing. So let's get her started. So first up, we have Orange County. The biggest, scariest issue here is the amount of homes dropped by 36% year over year for what we usually see in April. And that's not a good sign going into the summer selling season. Median sales price, however, bumped up quite a bit. So basically, if you lived in Orange County, you owned a home, chances are your equity went up 65K year over year. Now, if we look at some of the cities in Orange County, pretty much across the board, the amount of homes sold were in the negatives. So, and not even close to where I could be like, we might show positive in a week or two if some of the data gets updated. No, we're pretty far off. So that's something of why we need more listings. I know for sellers, your biggest fear is, if I list my house and I don't have a place to go, well, that's why you have a strategy session with a realtor. Because if you're prepared, you don't have to worry about that. Median sales price. Median sales price pretty much jumped up. The only area where it didn't was in Winter Park, and that was just slightly off. But a lot of that's because they have the higher price homes, so they're going to fluctuate a lot and with less homes. But for the most part, I mean, 17%, 7%, 25%, 18%, 30%. I mean, it's pretty intense. Now we move over to Seminole County. Again, the amount of solds dropped negative 14% in that county, but the median sales price went up 65K, 20% increase. So you live in Seminole County, chances are you just gained $65,000 year over year as well. So some of the cities in Seminole County, now it's a little bit different story on the solds since their number was closer. Like we have Casselberry actually sold more homes this year. Oviedo's sold more homes in April so far. But some of the other ones, Sanford down 29%. So it kind of bounces out, which is why it's brought it down overall. Median sales price, though, I mean, pretty much across the board, it's almost a flat out 20% average per city in there. Altamont Springs even had a jump of 9%. Now, Sanford had a little bit of a decline, but not too much on there. Now, Osceola County, their solds are down 27%. Are you catching a theme here? Median sales price, though, is up almost like 100K, 25%. That's intense. Now let's go ahead and take a look at the cities. So with some of the cities that we follow in the Osceola County area, Kissimmee, they're down 21%. St. Cloud is down 19%. Poinciana decided not to play in the month of April. Median sales price for the areas, Kissimmee, 100K increase, yay. 90K out of St. Cloud, yay. Now just take a look at Lake County. Lake County also down 22% with their inventory of solds. Median sales price, though, is up $85,000. Congratulations, Lake County. You just got a raise if you own a home. Days on market is also down a little bit, but we expect it because we're just speeding on through this year. Now let's look at some of the cities that we follow in here. Again, inventory is down across the board. Mineola, though, is the only one that seems to be up. Medium sales price, though, is up across the board. Most of them are in their low 20s. The only one that's not is Sorrento, which is only up 11%. But it's still up, and it's still up double digits. Now, Volusia County also has their inventory down. So that is down Median sales price, though, is up, and that is up $55,000. So that's a pretty good boost there. Now, some of the cities that we follow in Volusia County, you got Deltona, which is up 65K. You got DeLand, which is up just around 80K. And you got DeBerry, which is up close to 90K. So congratulations for those cities. Now let's look at some of these month supplies. As you can tell, and you'd expect this based off the price points, the lower the price point, the less month supply that we have. And that's the case, 0.6 months for anything below 500,000. You got about a month supply from 500 to 750. And then when you get over the millions, you're talking about 2.2 months, but that's still pretty quick. Now let's look at this, which this is kind of telling. So the bluish purple is the amount of homes sold, and then the current listings on the market. And pretty much the actives are not pacing with the amounts sold below 750. And that's a big thing because that tells you how fast our market's actually moving. Now, the last graph I want to share with you, this is sales prices, percentage of list price. So basically you list the home and what's the chance that you get 100% sales price. And this is a number that any good realtor is going to pay attention to. It tells us a good idea of what the market's looking like. And also we look, like for me listings, I know what percentage I get on mine because that's how I'm delivering the good service to you. So below 250, 99.5% of list price. 250 to 500, it's 101.4. 500 to 750, 101.4. 750 to a million, 100.6. And then a million to 10 million, 97.8. So you do have a drop off when you get up into the higher prices. Now, here's some of my takeaways. So this data is right now is showing that the sweet spot seems to be 250 to $1 million. They're flying off the shelves. They're going for above asking. These are where you're getting into those multiple offer situations that you're hearing about. That's driving everyone crazy when they hear about 20, 30, 40 offers on a home. Inventory, though, has been decreasing. And that's scary going into the summer selling months where we're going to increase the amount of buyers that we have, wanting to get people taken care of before school, and the amount of homes that we have, which is going to further drive up the price and could continue us through the rest of the year. So I know many people feel that we're going to topple over and there's a bubble. No, there's not a bubble. It's demand and supply that's driving us. And right now, the supply is still going down, but the demand is about to get a spike and an injection here with school getting out. And then the lower price homes seem to be getting a little less than list price. And you're seeing the crack in that armor. And part of that is going to probably be driven by interest rates. Because as people's interest rates go up, their ability to afford homes happen less. And it's going to happen more at the bottom bracket than the top bracket, because the top bracket, more financially secure, typically, they're not struggling trying to get in there. So different type of demographics on there. And then the investors that might be trying to get that deal going for the lower home, they're going to drive it down. So that's where we're seeing some pressure on there from the interest rates. Now, with the spike in interest rates, it isn't something to say, oh my God, I can't believe the interest rates are going up. Keep in mind, if you ever bought in the 80s or 90s, you had double-digit interest rates. I don't see us doing that because it wouldn't be good for our economy. So, and I'm sure the Fed knows that. But the Fed is currently under a pressure point because it's one of the ways that they're going to work on control inflation. You know, it's another way to control inflation? Buy real estate. Because inflation and real estate, you kind of hedge against inflationary numbers because of the value increase in your home. And I mean, you saw some of these cities, 20% increase in value, but inflation, where is it? Last time I heard something about it, 7.58% maybe, might be a little higher now. I think a report came out this past week, but last month report, I saw something different. So think about it, 7.5% inflation, but your home increased 20%, you made 13%. However, you keep your money in a savings account, 7% inflation, 0.3% percentage here, guess what? You lose money. So just helping you out there. Now, please leave a comment. I would love for you to subscribe to my channel. connect with me online. I want to be here and be a resource. So, and I'm here to help you the best I can. Hope you guys enjoyed today's Monday market update, and I hope it was useful to you. Stay tuned for next week's Monday market update.